Good morning, traders. This is Chris Keene from KeenPointOfView.com. Last night we had the release of the Aussie Reserve minutes, and this actually pushed the pair much higher. Much higher, as in actually Asia, there was a general risk on dollar weakness trend that occurred starting around 9 o'clock Eastern time. The Aussie broke through the trend line that had contained it over the last few days and has pushed higher. Almost up 100 pips from its lows of the evening. If we take a look at a bigger chart, a longer term chart, we can see that the cross is coming up on significant resistance here at 103.25. This could contain the pair heading into today's trading, but there's a couple of reports that we need to keep our eye on today. That's going to be market makers coming up very shortly. Within an hour, we have the consumer confidence report out of the USD. This, of course, it could indicate any new calls for quantitative easing, but that won't get too much of a reaction until this afternoon when we had Fed Bernanke speaking to the Senate about monetary policy. Some people, I guess, are expecting him to be a little more aggressive and suggest that we need quantitative easing, but I would highly doubt that he would use his time talking to Congress to, say, announce a new fiscal program or anything like that. If anything, he'll probably remain allude to the fact that quantitative easing is possible, but and keep it on the table just like that. So whenever we have any kind of bad news, it will actually cause a rally in the currency. So let's take a look at all the rest of the majors real quickly. We have the Euro USD. As you can see, it broke higher also last night. A little bit higher, but it's bouncing up towards resistance at 123.30, and we have support down here at 121.50. The pair could remain in this range until at least the Bernanke speech today. If we get a break above to the top side at 123.30, we could move up towards the 124.05 level. Next pair, you can see the Great Britain pound. They broke up higher yesterday and actually broke through, tried to break through resistance, but it hit the 0.382 fib level at 156.60 and was rejected and moved down actually almost 50 pips right there. Would have been a nice 50 pip trade. And now the pair is consolidating quite a little bit here. We have resistance still back down at past support, past resistance turned support at 155.75, and I'm still going to respect this resistance zone at 156.60, but it's the 0.382 from fib from the May lows. The New Zealand USD, as you can see, moved up with risk yesterday, moved right up into the 80 level, and now it's bounced back. This new zone could be the area for the good part of the beginning of the week. So we have support, a good range here. We have support up here down there at 79.30 and resistance at 80. The Canadian dollar, which could be in a bit of play today because we have the Bank of Canada's rate decision. The Canadian dollar is in a trend in itself, and you can see that the bottom of the trend is the 50 fib at 101.23, and the top is 10.02. The pair should continue to range inside there, but depending on what the Bank of Japan says, Bank of Canada says, we could get a shot out into either one of the sides. I would wait for the interest rate decision and then make my own decision on which way I want to trade the pair. But if we break lower, I would expect the next level of support to be this 0.618 fib level, which comes in around 10050. If we break higher, we've got the highs right here at 102.50. Let's take one last look at the USD JPY. You can see everybody knows it broke down yesterday. It's trying to get back in. If it can break back above 79.10, we'll be back into the range, but there's a good chance it'll move up to this and then bounce down again and just test this level and then bounce back, and then we'll have support at 78.60. All right, everyone, this is the morning call. This is Chris Keene, and that's your rundown of the majors. Good luck trading.